When you look at the charts, it feels like prices for current coffee prices and cocoa at the end of last year had never been higher. But history tells a very different story. Adjusted for inflation, the real peaks happened decades ago in the 1970s. Today, we'll explore why those historical highs still matter and how markets have evolved since, and whether we're seeing the same warning signs of volatility returning. It's my pleasure to welcome back Lucca Bezzon and Fernando Maximiliano from our StoneX Brazil Market Intelligence Bureaus. So in nominal terms, these high prices look extreme, but adjusted for inflation, they're actually below the 1970s levels. Why is that, Lucca?
Hey there, Fiona. Thank you for the introduction. Talking about the difference between the prices between now and then, even though it has its limitations because the context usually varies a lot, the tool of adjusting prices with inflation is one that analysts usually use to understand what's the real toll of the price variation to the consumer basket. This happens mainly because the value of money decreases over time, and $1, for example, in the 1970s, doesn't buy the same as $1 today buys. That said, it is important to mention that we've noticed that both cocoa and coffee have had similar experiences regarding real prices and nominal prices. We've seen a surge between the years of 2023 till now, and lots of other surges in prices during other periods. But one that really was highlighted by us is one that happened in the 70s. For cocoa specifically, there was a big surge between 1974 and 1976, which was also the reflex of a drop in price of drop in the production in Ivory Coast and Ghana, in West Africa as a whole, and caused the stocks to grinding ratios, which is a ratio that we use to understand how the global stocks are able to be used in the production worldwide. They were also in their lowest levels, even lower than what happened in recent years. So we can do a lot of parallels between that period and now, and see cycles and understand what happened and what may happen now.
And Fernando, with the coffee market.
Yes, we did this analysis, Fiona, considering the PPI, which is an inflationary index for the US for the producer price index. So we try to understand the buying power of the money compared now and back to the 70s, because we had this very sharp surge on coffee prices in the same period as cocoa prices. While cocoa was suffering in Africa because of weather issues, in Brazil, the main factor behind that move was the Black Frost, which was a very specific event we had in Brazil. We had a frost in the state of Paraná, which was the largest producer in Brazil. Nowadays, that's not the case anymore. Now, Minas Gerais is the largest state, but the frost was able to decrease dramatically the production in Brazil. Just as a reference, the production went from 23 million bags to a little bit over 9 million bags. That's 60% decrease. And if we draw a parallel to what we saw recently, it's kind of similar, because we had a frost in 2021 as well. We had problems in production in the cocoa side as well. We had weather issues, but the size of the drop, the decrease in production is much larger back in the 70s. So if we consider nowadays level, it's like Brazilian production going from 65 to 26 million bags. So that's something we didn't see, even with the weather problems we had recently, we didn't see happening, the size. And when we do this, the historical price, if we compare to price nowadays, we saw prices reaching the highest level in the first quarter, as we said, going way above 400 cents. But considering this correction, prices the peak price would be around 1400 cents in 1976. So that is those are parallels we can draw between those markets and those periods, but the scale was much larger back then.
And how does today's market environment compare to that of the 1970s? Lucca, what's your take?
It definitely changed a lot. We have now more consumers for cocoa products now than we had back then. We've had a process of homogenization of um, the consumer habits. So what once was mainly limited to North America and Europe now goes through Asia, Brazil, and so that's one big difference that we have. Both the production and the demand have expanded since then. In the 70s, it's important to note that we've had important difficulties regarding logistics, mainly because of the surge in oil prices. We've had two big shocks during this decade. One in 73 and one in 79, which increased a lot oil prices, which may have taken a toll also in cocoa prices and coffee prices at the time. But it's specifically for the cocoa sector. It is important to note that in the 70s, the stocks to grinding ratios were in an even worse scenario than they are today. That ratio that in the 70s was around 19%, which is the smallest one we've had a record of, now went to around 25% in the 23, 24 harvest, which was the second lowest level of stocks to grinding ratios.
And Fernando, with coffee, the same question.
Yeah, we have a different situation nowadays. We have back then Brazil nowadays Brazil is the largest supplier and plays a huge role in the coffee sector. But back then we didn't have like Vietnam, for example. So nowadays we have other countries producing. The global production expanded as well. Another thing important, Brazil used to have the production concentrated in the Paraná stage, which was exposed to those weather problems. Nowadays we have the production well spread throughout Brazil. Minas Gerais is the largest producer, but we have other states as well. Espírito Santo is the second largest. We have an increase in the importance of Robusta coffee. Robusta is starting to be more known and be more used globally speaking. So it is a way different situation nowadays. Also, we can talk about technology. Back then, we didn't have the technology we have now to understand what's happening and to communicate the way we do right now. And for those reasons, we see differences between those periods in the history.
And do record nominal prices still impact consumer behavior despite lower real prices? What do you think, Lucca?
Yes, definitely. Even though the current price increase is still lower than what the real prices showed in the 70s, the price increase is certainly a significant one. We're talking about the commodity that has increased in price the most in 2024 and continues to be around twice what the historical average shows us. Cocoa prices, which used to be around $2,000 to $3,000 per ton, continue to be around $6,000 today, even though we had a nearly half price decrease during 2025. So prices are still very, very bigger than the historical average has shown us.
And
Fernando, is that the same with coffee?
Yeah, even though the supply shock in 2000 in these recent years was not as as dramatic as we saw back in the 70s. Indeed, the price increase has been reshaping and impacting the global coffee sector and the consumer. As we mentioned, we even expect global consumption to fall 3% in 2025. We saw data from a BIC showing over 5% decrease in the retail sales. We are seeing indications of slowing demand, slowing consumption worldwide. So for sure, the increase in prices has been impacting the industry, and it is something that plays an important role in the coffee sector, even though the size of the impact was not as large as we saw back then.
And could current price dynamics bring renewed volatility similar to past decades? Lucca?
Well, I believe it's a bit early to know, but for now, the episode that we've seen in the 70s has been at some level of comparison being renewed in the episode that we see now. Just because it happened in the 70s doesn't mean it will happen exactly the same now, but it is important to note that usually when we have a peak in prices, in cocoa prices, which are derived from supply fears and fundamentals, it produces market participants to renew their production investments, which usually takes about 4 to 5 years, which was generally the time that took prices in the 70s to renew, to come back to normal levels. So that's what we are seeing still in the current episode. We see that the price in the shock in prices have caused an incentive for new investments, which might in the next following years reflect on bigger production, which in turn could could produce lower price levels in the next few years compared to what we see now. But I think it's still a bit early to be certain about that, especially because of the price levels we've reached, which may never come back to what was used to, mainly because investors might have woken up to the fact that production is very concentrated in West Africa, and if we don't have a reliable supply source, prices may remain higher as investors see a bigger risk regarding supply specifically.
And Fernando, the same question for coffee.
Well, that's a very important topic that Lucca brought here, is the commodity cycle. The same rule that applies to cocoa applies to coffee and applies to many other commodities. When we saw a supply shock, which causes increase in prices, that usually contributes for more investment in the production. So farmers start to invest in more, and then eventually the production will rise up again, and we could see lower prices. Back in the 70s, it took a couple of years to recover the production, and now it will take a couple of years as well, because coffee is not like an annual crop. Coffee is a perennial crop. So you plant coffee, you have to wait 2 or 3 years to start harvesting, and then a couple more years to peak the harvesting. So we'll see this throughout the coming years, and we are seeing investments. We're seeing investments in Brazil. We're seeing investments in the coffee production, but it takes some time to recover. But I'd like to highlight something else. Considering the weather changes we are facing, the increase of extreme events, the number of extreme events has been increasing, and that puts a risk in the recovery of the production in the country. So that's something we'll have to continue taking a look. And also it brings us to the moment where right now we used more than 22 million bags of global stocks, and this year 2025 the production wasn't able to recover any stocks, and in 2026 comes as an year that everybody is expecting that the production will be able to recover part of the stocks. But again, it comes out, the weather is a risk that we are all having to face, and we'll have to continue monitoring.
The 1970s taught us that even the strongest markets can turn quickly. In our next and final episode, we'll ask the critical question: with cocoa prices now falling sharply, could coffee follow the same path?